Senator Butler, who's been called to preside, and Senator Smith, thank you for ceding your time for a moment. Senator Butler.
Thank you, Mr. Chair, and thank you to Senator Smith. I appreciate the chair and ranking member for holding today's hearing and want to join my colleagues in honoring the service of Secretary Fudge and her time in the role. And you all are taking on and continuing leadership in an important moment for the American people relative to housing affordability, and achieving that thing that we call the American dream, the ability to sort of pass on generational wealth across families. Director Thompson, thank you so much for the previous conversation. And I want to sort of pick up where we left off. The analysis conducted by Moody's estimates that the U.S. economic losses from the recent California flooding at about $5 to $7 billion. Last week, the insurer with the largest market share in California announced it would not renew the homeowners, rental dwelling, and other property insurance policies of 30,000 Californians, leaving them financially on the hook for millions or even billions of dollars in the event of future climate disasters. And I know that it's not just California, but Louisiana, Texas, Florida are also facing challenges in their property insurance markets. In our conversation, you mentioned that FHFA does not receive notice about insurers withdrawing from insurance markets and the downstream effects that this can have. Could you elaborate on these withdrawals, impacts of homeowners, future homeowners, not just in California, but across the country?
Sure. Thank you for the question. Property insurance is a requirement, property and casualty insurance is a requirement for any loan that's purchased by Fannie Mae or Freddie Mac, and they have to have that in order for Fannie and Freddie to purchase them. And when property carriers withdraw from large populations, it's very difficult, especially for first-time home buyers, to purchase a home and then have to search for a policy to adhere to the requirement that we have that they purchase the loan. You know, it's interesting because we're starting to see a lot of natural disasters, and the collateral that FHFA is responsible for, we've got about $8.4 trillion outstanding in mortgage collateral. So these natural disasters impact us greatly. So we've got multifamily properties and residential properties. And so when there is something that happens, it impacts the valuation of our property. From an insurance perspective, we're starting to see a number of climate issues or natural disasters take place. There used to be about 3 issues per year that were costing over $1 billion. And now, just last year, there were about 28 different issues that cost over $1 billion each. And so the impact on our portfolio, where our only asset is mortgage collateral, either a house or an apartment, is just phenomenal. We would really like to work with the mortgage industry to address this issue. What we're finding is that premiums are going up and borrowers are not being able to afford some of their monthly payments with little or no notice. And so we're also seeing a reliance on state plans for insurance, whether it's flood or otherwise, that we really want to address as we try to deal with the cost of just owning a mortgage. We've been actually working with the insurance commissioners in some of the states that have lots of natural disasters, California, Florida, Louisiana, Rhode Island. We've been working with the NAIC to try to address this very important issue.
And to that point, just really quickly with my last 50 seconds, I do want to just offer either or both of you, Ms. Timon, Secretary Timon, I'd offer you the opportunity first, but just to talk about what steps can we collectively, HUD and FHFA, take to, in the near term, at least to develop a framework for protecting consumers in the event of these natural disasters and insurance provider withdrawals?
Well, I'm happy to pick up where the director left off. You know, as you know, HUD has limited authorities as it relates to the insurance industry. But what we have done is we've convened an internal working group to look at, with the authorities we have, how can we help consumers? How can we help some of those housing owners who's saying that they're having increased operating costs because of outrageous insurance increases? And so as soon as this week, you'll be hearing HUD announce some of the things that we can do. And there's a whole body of work that we'll be rolling out, including engaging with the insurance industry so they can understand the impact on housing affordability.
Senator Rounds of South